Hey, it's Mack with PriceActionTradingSystem.com. It's Thursday, it's January 19th. This will be our chart lesson for the day, and this will wrap up our week. No chart lesson on Fridays. Um, we got a pretty good day today. I was beginning to wonder if prices were going to move this month. Generally, Januaries are pretty good trading months, and last couple of days it's been really weak, but we got some nice movement today. There was a crude oil report that came out around, I can't remember if it was 10 or 10:30. Um, so you had that going on. Whether or not that's what pushed prices on down, who knows? But it doesn't matter. So you just have to be aware of when some of those high volatility news items come out, just to make sure you're probably flat right before it comes out, and you wait till things settle down if it does go haywire before you try to enter again. And we don't care what the news says or even what happens after that, other than we want to take advantage of it. So really, things didn't drop off really till almost 1 o'clock this afternoon. So even if even if this was a direct result of a crude oil report or some kind of report coming out of crude, it didn't affect things very much really. And the concern we've got. So as far as being in the market when something crazy like that happens and you're getting whipsawed and getting stopped out with a loss or something. So, but yeah, some good movement. I noticed I got this little box right here. This is a trade that a trader sent me a question about, and so I want to talk about this just to make sure other people get this too. This was a live trade, no less. So I really felt like I wanted to talk about it. So and I also want to read a couple of quick emails that I got. Let me just do those real quick. Just for those of you that are struggling, um, just so you know that there are other people having success. So not everybody struggles, even though most people do early on. But I got an email from this gentleman. Just says, "Hey Mac, it's been a while since I said thank you." And then the next line says, "Really appreciate your videos. My last month trading, I made my 2 point target 20 days in a row." That's pretty impressive. 20 days in a row. He's only trying to get 2 points, but that's probably two trades for him, 20 days in a row. So that it shows you it can be done. Um, hadn't heard from this guy in a long time that I can remember off the top of my head. So it's nice to get those notes, because usually, when people start having success, you don't hear from them very much anymore. It's the ones that struggle and can't figure it out and think that they're cursed or something. And but really, the truth is that most people just have unrealistic expectations. This is not easy to learn. Listen, if you can master being a day trader, you can make more money than a medical doctor, than a lawyer here in the U.S., than many times professional athletes here in the U.S. And you know what kind of money those people make. They're some of the wealthiest people in the world. And uh, as a trader, you can make more money than them with half the stress, working a fraction of the time. So don't expect this is going to be easy, where all you got to do is read a price action manual or join a trading room, and you're going to learn this stuff in a few weeks or a few months. It pays better than those other professions I named. So expect that it's going to take as long as some of those other professions. So be thinking months and year time frames to be successful at this, not a few weeks or reading a book or reading a manual and thinking you got it, because it's not going to happen, people. I can promise you. I don't care what your IQ is, because really trading goes against common sense. So the more common sense you got, probably the harder it is. One thing I know for sure is that engineers and those type people that uh, that are trained and disciplined, that everything is in an absolute perfect world, that trading, those people struggle to be traders more than anybody, because their brain is just not trained for it, because everything we do really goes against common sense almost. So just some things I wanted to share. I think there was one other email I wanted to read. Let me see if I still got that one. Oh yeah, this gentleman sent me this just as something to pass along to others. Um, He just says something that, Mac, something that really helped me gain an understanding of this that I think will help others is the NinjaTrader market replay function. I've never used that function, but I've heard a lot of good things about it. So, um, being able to play several days in one day and then being able to study those days definitely reduced the time it took me to understand this. I didn't really discover it until about a month ago, but that was a very big help for me. So yeah, if you have NinjaTrader, there is a replay function. Don't ask me how to use it. I don't know. I've never used it. But one thing I can tell you about NinjaTrader is you can go to their website and they have videos that will teach you anything you need to know, how to put in an indicator, how to draw a trend line, how to set up some of the special things that we set up. They have videos um, that you can go watch, and they're very well done. They're very easy to understand. And so if there's something I need to know about NinjaTrader, that's what I do. I go over there and find the video on it, and I watch it, and that's how I do it. So I mean, I'm not that skilled with NinjaTrader. I tell people all the time. They send me these little tips and things, and they send me these little add-ons that make things easier. But I'm a creature of habit. Um, Really, all I do is draw trend lines and support and resistance lines, and I enter and exit trades. I don't do much else with it, even though this software has all that functionality, and all these nice little bells and whistles. I don't use that stuff. Um, what you see on here is what I use, and most of that's all manual. And so you don't need all that stuff. If it helps you, by all means, use it, but you don't need it. So don't get hung up thinking you need all these fancy bells and whistles. You just need a good data source that gives you good data, and you need to be able to plot it and draw your trend lines. And if you've got something that does that, you've got everything you need. I do use this news thing here. You see there's something supposed to come out at 7 o'clock tonight. It won't affect us because I won't be here. Um, and that's a high probability, a high volatility news item. Whenever the Fed speaks, you got to pay attention. So, because they can say something that drives the market crazy. So it'll be interesting to see if during the overnight tonight something crazy happens at 7 o'clock. But yeah, that's really one of the only indicators I use other than this 21 bar EMA average. Outside of that, I don't use any indicators. People say, well, don't you want to know what the volume is? I can see the volume in the price action by how many bars are printed, how quickly they're printed. Everything you need to see is in this price action. You just have to learn to see it. And of course, if you use a crutch, it's just like having a broke leg. If once your leg starts to heal, if you keep walking with that crutch forever, your leg's never going to get strong and heal up 100% again. So it's the same thing with trading. If you use crutches, you're never going to wean yourself off of them 100%. You're going to always be trying to fall back on them or rely on them. Take those things off your chart, and I promise you, it may take 2 or 3 weeks, but after 2 or 3 weeks, you'll think, why the heck did I ever have that stupid thing on there? Because all it did was confuse me. Anything you need to be able to trade profitably, you can see right here in these price bars on this price chart. And I added in the things that you can't see. Really, I can almost see these trend lines just by glancing at it because I've done it for so long. But sometimes I still have to draw them to see them. So, and early on, you definitely have to draw them to see them. So draw your trend lines and be done with it. And you don't need all that other stuff. You don't need multiple charts or different time levels or anything. If you start looking at this single chart, you will learn to see it. And since I'm on my soapbox today, I will mention this. I get a lot of questions about people watching multiple markets. Should you do that? I sit here and wait, and it takes too long for a trade to set up. So I like to watch something else, or I might miss something. That's too much excitement from trading. You're going to make mistakes if you do that. You'll be watching one chart, and you'll flip over to the other one, and then you'll be watching it and nothing happens. You flip back and you missed a trade on the other chart. My personal take is that you're better off to find one market that you like and become an expert in it and just trade that market. You don't need multiple markets. You only need 1 or 2 trades a day. And so you can find that. And the reason most professional traders trade the ES is because you need the volume. You can go, there's probably some other markets out there that are a little easier to trade and so forth, But you can't, if you're going to scalp, you cannot afford slippage. Not even one tick, or you'll mess up. I mean, so I like the ES because I never have any slippage during regular trading hours. And you can trade a lot of contracts and never have slippage here. It's not to say that there couldn't be a thin spot somewhere that one day you don't get slippage, but it's very rare in the ES during regular trading hours. And I hear stories of people trading 100 contracts, no slippage. So that's why they trade this one, because they can trade large numbers and you don't have to worry about slippage. So anyway, that's enough about all that. Let's get to the chart lesson today, because I do want to talk about this trade here as well, and I don't want this video to be too long. We're already 10 minutes in. So when I came in, this looks like a trading range day. We're still trading below the high, under the overnight high and overnight low at that point when I come in around 7 o'clock. But look at this reversal pattern. I want to show you, you look for that failed second entry short. So you got a new low, you work up, you get a first entry, you take another leg up, and you get a second entry short right there. And notice how we push through the EMA and all that. That is an ideal reversal pattern. And when that fails, when prices break above that bar, that's when it actually fails. And you want to be anticipating that may be what's fixing to happen, since we shot through the EMA. And look at that. That's just a quick, easy move to a new high. And then look what happens. You get the same pattern on the other side. Look at that big, huge move down. You pull back, you get a first entry short. You pull back again, and you get a second entry short. You actually get a second entry short right here, but it wasn't a failed second entry long until it broke higher right here. So that's where you actually want to go short after the failure. You could have gone short right there, and I think you still would have got your 5. Yeah, you still would have had a winning trade, but until it broke higher, I wasn't going to go short. And you didn't want to go long here, really, because you've got all these bars going sideways. You got what looks like a little bit of a trading range, but then it pushes lower, and then it makes a lower high. So that's still trending lower. And you got your reversal pattern right there on that failed second entry long. Everything's now pushed below the EMA. That's what reversals look like. And really, you could almost consider going short right here again on that big bearish bar. The only reason I didn't like this one is because of those 3 matching lows and the fact that there's another couple of lows right here. So that's almost a double bottom. So I was a little leery there. I think you were better off to skip that one. And then, of course, it pulls back again here, but you're off the lower side and you're going to reverse here pretty quickly. So you can't go short below that bar. So this would have to be your signal bar, and then that would have been a failure, because you're bouncing off the lower trend line. And so even if it overshoots it, it's probably going to bounce here soon. So you got to skip that one. So look what happens. You're working up, first entry short. There's actually a second entry short there. The only reason I didn't like that one, and really you almost could have stayed with it here and taken that one, but you got a little trend line working up, and you may get the retest. And you do actually get a retest. It doesn't make a new high, but you get a retest right here. So when it turns lower right there, I didn't like that bar. It wasn't bearish enough. Let me make that bigger. That may be hard to see. That's too close to being a doji, but when we got this one, I liked it. So really what you probably should have done was let it break below this bar. You could have actually gone short on the stop right there, sell stop. But if you wanted to, let it break lower and drop your limit order back 1 tick below this bar where your original trap would have been set. But again, this is so bearish, you could go short right there, and it still has the same high. Your stop always has to go above your signal bar. And then it makes a little higher low right here, but by that time you look like you're going sideways, so I'm not going to enter there. And then guess what? Notice you made a new swing high, pull back first entry, you move down, you get a second entry long right there. It actually goes out the top first and fails, and then goes out back out the bottom. So, and then look how bearish that bar is. So you could have gone short here. I marked it green, but you got your break of this channel or close outside this channel coming down now, and you're only a few ticks from a new low, and you got that low right there, and then you got your overnight low that's not even much further than that. So that's a little risky. Notice that it worked, but if you're going to enter here, you'd have to let it break lower and maybe drop a limit order far enough back in here where you got enough room to get out before here. And you could have. It would have worked because this thing backed way up again. So you could have gotten short maybe 2 or 3, 4 ticks back into this bar itself, and that would have given you plenty of room to get out. And then, of course, you got a channel working down. And at this point, this is still looking a lot like a range day because this is holding and then suddenly it breaks. So this is looking like a failed break lower right here after a break of your channel and 2 legs down to a new low. And look how far away you are from the EMA. So a lot of aggressive traders are going to take that knowing we're going to snap back at least to the EMA. And guess what? A lot of times, you hear me say this a lot, you may catch an important low of the day. And in this case, if it would have been an important low, it would have been the low of the day. Still an important low, but it might have been the low of the day. So I like to take a chance on those sometimes. Generally, you're better off to wait on the higher low, which came here. But now you're right back into the EMA, and you may find resistance there. And this could be a 2-tiered channel or something, or maybe it's just a breakout pullback short and it goes lower. Because even though this looked like a range day up until this point, it doesn't turn out to be a range day. It turns out we've got another trend channel line working, or trend line working down through here. You really couldn't verify this one until after you got this high, and it's still holding the rest of the way down. So, but I didn't like that one, and this one's aggressive. And then of course you get a second entry short right here, but you don't have any break of that trend line. This is looking pretty bullish, and you really haven't had this one confirmed. You'd want to draw it now that you got this one. You could kind of eyeball it there and see, hey, something's going on there. So you draw that line, and you really don't get it confirmed until it comes back here. So, but notice what happens. You got this trend line working up. You get a break, a retest attempt with a new high. Imagine that. And then it turns down again. That's what you want to see. This was a perfect setup. And notice how everything's still closed below that trend line. That's a perfect setup. And you could almost, the only reason I didn't mark this one as red is because I think you're better off to wait on a lower high or the failed or the reversal pattern. We're still all above the EMA here, so there's still a chance we could bounce and go higher and make another leg up. So I was a little bit leery of that one, but that is a good setup. There's no reason you can't go short because you fulfilled all this move up with your trend line rules. But you're better off to wait. Notice what happens. You got a new high, you pull back first entry, pull back second entry, and everything's bouncing off that trend line. Look at that. And it actually went high there and then turns and goes out the other side. You could have gone short there. Or you could have waited on this bar, let it break lower, and either drop a limit order back, or you might even use a stop there. I'm a little hesitant to use a stop right there because of that double bottom. And if you use a stop here, you just barely get out. You still get out, but you just barely get out. But at this point, you got to assume this thing's probably going lower. It does come back a couple of times, though, and that's what you got to be concerned about. But notice every time it comes back, it bounces right off that trend line. And let me go ahead and talk about the trades, and I'll come back and talk about this. So, but yeah, that turns out to be a good entry point. Then you make a new low, and you pull back, and you get a first entry there, and then you go higher, and it fails and turns and comes back out the other side. So, and then you get this real bearish bar here. With that bouncing off that trend line and the fact at some point you're going lower. So I like that one. It's real close to being green, and you probably could argue it probably should be green. This is a key entry point, but still, look at all that sideways action. It's always dangerous. And notice that even though it did go lower, it comes back again. And that's what happens on congestion. You can't trust congestion. So really, I think I'm going to change that to green. At this point, it's looking pretty bearish, and you got to really confirm trend line multiple times. But the fact that it's not taking on off has to be a little bit concerning. But notice what happens. You actually make a new high here. This swing high is higher than this one, you can see. And so first entry, pull back second entry. Now you get a failed second entry right off that trend line. Actually, your bar should be right here. So you can go short below that bar. Even though it's not very bearish, it's a trap, and it's a key entry point. Just take it. And you actually could have waited on this one and gone short even right here. And notice what happens. I gapped over that point right there, but it pulls back and feels it and then turns down. So this is a new high here as well. And so you could almost treat that like it really is a measured leg down, a correction, and another measured leg down. So that's still basically a failed second entry long. If you went to a slightly larger chart, it'd be clear, crystal clear. So I like going short there too, figuring that, hey, we're finally going lower. It's also could be treated like a breakout pullback long. And if you caught one of these, you get to ride this all the way down with any runners. And I'd sure be trying to get a runner here too, because you got to figure at some point where that, at that point I wasn't sure if the trend channel was maybe here. But it turns out this is just a midline here. And your actual trend channel is way down here. So once you start going down, you measure that. You try to find that distance, and which really you didn't really know where it was. You just drag it to the bottom at that point. So that's all I did was drag it to here, and look where it bounces. Exact same spot. So, so yeah, and then of course it bounces here. And the only reason I didn't like this is almost a repeat of this one over here. It's kind of a very similar thing. And notice what you would want to do here is you measure that leg down. And once it starts heading lower again, you're looking for that measured move. You can see we actually went a little further there. But this is like a second leg and a repeat pattern of this one. And so you might consider going long there. The only reason I didn't really mark it is because there's no break of that little trend line working down through there. That's the first break. So it may push down again. But it's probably worth, since it's a repeat pattern and a second leg down, and it is bouncing exactly where you were looking for it to bounce, you might risk that one. And then, of course, watch what happens here. You push up, you get a first entry, then you get a second entry, and it fails. So, and the only reason that one's green is because this has been a big downtrend, and we're still below the midline. We're still below the EMA, even though you got what looks like a reversal pattern. It didn't get through the EMA or the midline yet, so I was a little hesitant of it. So it's a little more aggressive. It's not a perfect reversal pattern. It's close, so that's the reason it's green. And of course, that got you into the 2 o'clock hour. So really good trading day. Most of this was straightforward. If you saw the two-tiered channel, it was really pretty easy, to be honest. You might have, these weren't perfect setups, but you can see we're making lower highs and lower lows consistently. That's a downtrend. It's just a tighter downtrend now. And if I bet you if you just copy this line right here, just make a clone of that line and drop it down, and look at there. Imagine that. It just was a little tighter channel, and that's why it's bouncing there every time, until it finally pushes through and gives you a little breakout pullback short off that channel, and it goes lower, because this bigger channel is the main pattern. This is just a smaller pattern within the bigger pattern, and the bigger pattern always takes precedence. So anyway, let's back up here and talk about, oops, didn't mean to do that. Let me make it a little bigger here. This right here. This trader sent me this, and he asked me why this second entry failed right here. His chart looked a little different. I'll get rid of that. I just put that on there so I wouldn't forget to talk about it. His was more sideways here, but you can see mine's trending down. But his was the first entry right here. This part right here looks almost identical. This stuff of his was going more sideways. So he was not only entering on a first entry that he called it a second entry. I don't know why. Either he misunderstood or he's looking at something different than me. But that's not, you can see there's no other break. You got a new high, you pull back, that's the first bar that went higher, so that's a first entry. Unless he's calling this the second entry when it broke above that bar, so he doesn't even understand quite what a second entry is. You don't get a second entry till right here on this, so there's your first, and actually you got a new high there, so the count starts over, so that's a first entry too, and then you get a second entry here. So it's not the next bar, it's the next, you got to have a correction first. So there's no correction in here. So this is not a second entry if that's what this trader's thinking. So I'm hoping he's going to watch the video. And your entry here, even if you were going to go long, technically on a smaller chart, notice you move back, you get a little correction, and then you get another measured leg down. So if you went to a smaller chart, that's a second entry long, and you would expect a possible retest of the high. So this trader might, if you looked at it like that, you might say, hey, this is a second entry long. But if so, your entry is one tick above your signal bar. This is your signal bar. That's the lowest bar in the swing. So your entry should be right here, one tick above that. And if, guess what? If you'd went long right there, this trade would have still worked. It would have been a profitable trade, even though it's not a very good entry, and I wouldn't take it or even suggest it. But what he did was he waited on it to break above this bar, and then he tried to get in a little better with a limit order, so he got one tick better, and he just got trapped on the. It's just a long trap. And notice on top of that, I didn't even put it on here because you really don't need it because of the trend line. But look at that resistance across there. Why would you ever consider going long into that? You can't. I mean, that's a 1, 2, 3, 4. That's a quadruple. That's a multiple. We've tested that price range multiple times, and you're going strong or long into very strong resistance. So that alone was enough not to take it. Not to mention all the other things we just talked about. So I hope that's clear for that trader. If he thinks that you wait till the next bar and a break above it is a second entry, you need to go back and watch the videos. That's not a second entry. You're just entering way late here. That's just still the first entry all the way up here until you correct. And you would have, if it hadn't gone lower. If it hadn't gone higher here, let me take that back. If it hadn't gone higher here, that would have been your second entry because that's your next correction down. So that's the next time prices broke higher right there. But it doesn't count as a second entry because you made a new high, so it counted over. So that's another first entry. Then it pulls back. So your second entry is on the next bar that breaks higher after that correction. So let me just find another one like here. You're working down. There's the first time a bar broke higher. So that's your first entry. So then you start going lower again. There's the second time prices break higher without making a new high. So that's a second entry long. But you're counting wrong because we're going down here. So you don't want to be counting that way. Now you're looking for second entry short. So you're counting off the lows. So it gets real confusing. It's simple. It's like first grade math. But to sit here and describe it and if you're not used to it, it seems so complicated, and people just overcomplicate it. So, but I think that trader maybe has a misunderstanding of what a second entry. I get people that get confused about that a lot. They think it's the first break above the bar, and then if it breaks above the next bar, it's a second entry. That's not. This is all still part of the first entry until you get your next lower high, which is here. So now if prices break higher, you would have a second entry. Again, that doesn't count there because you made a new high. But just assuming you didn't make a new high there, you're pulling back. First entry, and you're pulling back, and then there's the next bar that you get a break above. So that would be your second entry if you didn't have a new high there. Hope that's clear. So, yeah, you can't enter late, and you're 1, 2, 3, 4. You're entering where I would be exiting. If I went long right here, that would be my exit point. And guess what? You're not entering until I exit. You're 4 ticks too late. And, these scalps are designed to get a minimum of 4 ticks. And a lot of them, that's all they get. And there's a reason why we go for 4 ticks instead of 5 or 6 or 7 or 8. Because you see these 4 tick winners all over the place. But if you try to get 1 tick extra on I wouldn't say most all of them, but on a lot of them, you're going to end up with a loser. So, especially the traps and the quick bounces in the opposite direction and that kind of thing. So, you got to go for 4 ticks and no more. So, yeah, good learning opportunity today. Talked about a lot of important stuff. But anyway, I hope you're doing well this week. I hope you're having a good trading day. And just remember, this stuff is not easy. You're not going to learn it overnight. So if you come in here with unreal expectations, you're just setting yourself up to fail. And again, this trader told me this was a live trade. He took 4 trades a day when he sent me this. He had 3 sim trades, and guess what? They were all winners. This was the only live trade he took. All the rest of them he took coming down with the trend. And then he took this one counter trend. But what it is, he thought the trend had reversed here, I guess, and he was going long. But even then, he went long right into the high of that trend. So he wasn't even going long in the right place. So I'm not sure exactly what he's thinking. But anyway, hopefully he watches this video and this is helpful to him and he gets a better understanding of what he did wrong and what a second entry is. And, I've got videos, free videos. You don't have to pay to watch them. Go to the website and Google, go to our priceactiontradingsystem.com and go to the little search function and search for second entries. Or even better, go down to the very bottom of any page and you'll see a sitemap link. And if you click on that sitemap, it has every article, every video, everything listed on our website. And you can just find the ones on second entry. Some of them are in the paid portion, but I've got free ones in there too. You can watch for free. There's also a couple on YouTube, so you could use the search function on Google and search for second entries on Google, and you'll probably find some too. And those are free as well. So you don't have to pay to find it. People will come back and say, oh, you want me to pay for that? No, you don't have to pay for it. It's free. I got free ones out there. So go watch them and learn it. But yeah, that's going to be it for today. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.